What if becoming a millionaire didn't require genius-level intelligence or working harder than everyone else? Imagine if you could achieve financial freedom without having to be the smartest person in the room or putting in endless hours of labor every single day. No, it's not about fancy stock picking where you try to identify the next big breakout stock, nor is it about day trading with constant monitoring of charts and news. Instead, it's simply about patience, consistency, and smart investing using proven ETFs. ETFs, or exchange-traded funds, are powerful investment tools that bundle together shares from many companies, giving you broad market exposure instantly. Today, we're breaking down the easiest way to become a millionaire through long-term investing by focusing on 5 proven ETFs that build wealth steadily over time. Vanguard S&P 500 ETF, or VILO, Vanguard Growth ETF known as VUG. Invesco QQQ Trust ticker QQQ, iShares Russell 1000 Growth ETF IWF, and Vanguard Total Stock Market ETF VTI. These ETFs stand out because they provide diversification across numerous assets, low costs to maximize your returns, transparency in their holdings, tax efficiency, and excellent liquidity. Whether you're brand new to investing or you've dabbled before, this straightforward method works brilliantly as long as you commit for the long haul of 15 to 20 years or more. Let's dive right in and explore how you can follow this path to wealth. Just patience, consistency, and smart investing with proven ETFs. But let's unpack what these elements truly mean for your financial journey. Patience is essential because building millionaire-level wealth through the stock market is a long-term marathon, not a short sprint. Markets fluctuate daily, but rise over decades. Consistency means committing to regular investments, such as monthly contributions to your chosen ETFs, no matter if prices are high or low. This is called dollar-cost averaging, which helps mitigate volatility by buying more shares when prices dip and fewer when they're elevated, ultimately lowering your average cost. Smart investing entails selecting these battle-tested ETFs that track major indexes and growth-oriented sectors, tapping into the overall economic expansion and corporate profitability without needing to analyze individual companies. This strategy harnesses compounding returns, where your gains start generating their own gains, leading to exponential growth over 15 to 20 years. ETFs offer critical advantages, including diversification to spread risk, low expense ratios so fees don't erode your capital, transparency with daily holdings disclosure, tax efficiency that minimizes capital gains distributions, and liquidity for easy buying and selling on exchanges. By embracing patience, consistency, and these smart ETF choices, you're positioning yourself for the market's historical upward trajectory. An ETF, or exchange-traded fund, is like a basket of many companies bundled together, offering instant diversification in a single, easy-to-buy investment. Picture an overflowing woven basket filled with golden orbs, each orb symbolizing a stake in a different company spanning various industries and sectors. This visual represents how one ETF purchase gives you ownership in hundreds or even thousands of businesses simultaneously. This instant diversification is a game changer because it spreads your risk widely. If one company or sector faces challenges, the strong performance of others can offset the losses, leading to more stable returns over time. Unlike investing in single stocks, where a poor choice can devastate your portfolio, ETFs provide lower overall risk and facilitate easier, more predictable growth. They trade on stock exchanges throughout the trading day, just like individual shares, ensuring high liquidity so you can enter or exit positions quickly without price disruptions. ETFs are renowned for their ultra-low costs, with expense ratios often below 0.1%, meaning nearly all your money stays invested and working hard for you. They also deliver transparency through daily public disclosure of holdings, tax efficiency via in-kind creation and redemption processes that avoid triggering taxable sales, and simplicity that empowers everyday investors to access professional-grade diversification and stock market growth without advanced knowledge. Examples like VOO, VUG, QQQ, IWF, and VTI perfectly embody these investor-friendly qualities. The trick isn't timing the market, attempting to predict the perfect buy low and sell high moments, because that's extraordinarily challenging and studies show even professional fund managers fail at it more often than they succeed. Instead, the winning formula is time in the market, steadfastly keeping your investments deployed over extended periods. Across long horizons such as 15 to 20 years or beyond, the stock market has historically trended upward, fueled by innovation, population growth, productivity gains, and increasing corporate earnings. This sustained presence allows your money to fully benefit from compounding, the remarkable process where returns on your principal generate additional returns, which then produce even more returns, like a growing snowball rolling and accumulating mass downhill at accelerating speed. Consistent investing over the years amplifies this effect exponentially, turning regular contributions into substantial wealth. This is precisely how ordinary people, without genius IQs or 24/7 work schedules, transform into millionaires. They rely on disciplined, hands-off strategies rather than constant intervention. Broad market participation through ETFs captures this growth reliably. Importantly, while historical trends favor long-term holders, all investments carry risk. Past performance does not guarantee future results, and you should align strategies with your personal risk tolerance, goals, and overall portfolio diversification. This is how ordinary people become millionaires without working 24/7, through patient, consistent long-term investing in proven ETFs. It's truly the easiest path to wealth available to almost anyone willing to commit. Now, let's examine those 5 standout ETFs in detail to see why they're ideal for this strategy. First up is the Vanguard S&P 500 ETF, ticker symbol VOO. VOO mirrors the S&P 500 index, comprising the 500 largest U.S. companies by market cap, including giants like Apple, Microsoft, and Amazon across tech, finance, healthcare, and more. Its worldwide popularity stems from rock-bottom costs, extensive diversification, and robust historical performance aligned with U.S. economic growth. The tiny expense ratio ensures more of your dollars compound effectively, positioning VOO as a cornerstone for enduring portfolios. Next, Vanguard Growth ETF, ticker VUG, zeroes in on large-cap growth stocks, especially tech and innovation trailblazers driving future profits. Over the past decade, VUG has posted strong growth by holding companies with accelerating earnings, offering high potential without stock-picking headaches. Number 3, Invesco QQQ Trust, ticker QQQ, tracks the NASDAQ 100, a tech-dominant index of leading non-financial firms. QQQ has excelled over long stretches, surpassing many peers despite volatility, as NASDAQ's historical surge builds massive wealth across decades, perfect for future shapers exposure. Fourth, iShares Russell 1000 Growth ETF, ticker IWF, targets growth-oriented large and mid-cap U.S. firms like Apple, Amazon, NVIDIA, blending sectors for broader appeal than narrow tech plays, delivering reliable long-term expansion. Finally, Vanguard Total Stock Market ETF, ticker VTI, encompasses the full U.S. equity universe, large, mid, small caps, for ultimate diversification and steady growth. It's the ultimate set-it-and-forget-it option. See the pattern? These avoid hot tips, embracing broad indexes and diversified baskets. In the last decade, such indexes averaged double-digit annual returns, multiplying capital for stay-the-course investors. Best of all, no genius required, just patience and consistency. Takeaway: skip stock picking and market guessing. Select solid ETFs, invest routinely, hold 15 to 20 years. That's wealth's simple road. If helpful, subscribe to Cashflow IQ for more strategies, comment your first ETF pick, and see you next time.